Well, the challenges for Canada's cannabis sector have been evidenced this week through Canopy Growth's restructuring. The shares down again today. They've taken a huge hit as the company is making moves that are going to impact hundreds of employees. And the CEO yesterday indicating that several years after legalization of the recreational market in this country, it is still awfully tough, arguably as tough as it could have been imagined, to compete with the illegal market, and Canopy increasingly focusing on the bigger opportunities south of the border. So what exactly does that messaging mean for the future of Canada's cannabis industry? Let's ask Pablo Zuanic. He is a tracker of this industry, an analyst with Cantor Fitzgerald. Pablo, it's nice to have you with us. What was your reaction to those comments yesterday from the CEO of Canopy?
I think they make a lot of sense. I mean, at the end of the day, this is an industry that added too much capacity when all that capital came in 2017, 2018. They overbuilt in terms of capacity, in terms of overheads, in terms of assets overseas. And pretty much every company of the larger ones that are still around over the last 3-4 years have been adjusting to this new reality, right? The Canadian market has a lot of structural challenges, and they are having to adapt. But the way I think about it is Canada, maybe like Holland, it's countries that sometimes you wonder, can they be and have big multinationals, right? And you have the forestry, the mining industries, companies from Canada have been able to export their model and be very successful overseas. Because Canada was the first country globally of the developed markets to legalize cannabis, the idea is that someday these Canadian companies are going to be the Amazon of cannabis globally, right? I know that sounds like science fiction right now, but I think what I would tell investors is that, number one, remember that this is a stock market and you have to diversify. You want to invest in cannabis. This is a very early stage in an industry. It's still very challenging, very volatile. So you have to be careful. But I do believe that there are Canadian companies that are doing the right things in terms of adapting. Again, cutting costs, improving cash flow, fortifying the balance sheet. I'm not going to give any stock recommendations specifically here, but in the case of Canopy Growth, I think they are doing the right thing. I'll come back to the US in 1 second. But what is the issue with the Canadian market? The Canadian market has very low prices because there's overcapacity, right? The prices are even lower than any state in the US, including Oregon and Colorado. Structurally, the producers of cannabis in Canada take about 20-25% of the revenue pool. The taxman takes a good cut. The wholesaler, which are the provincial boards, take a good cut. The retailers take a spread. In Florida, a vertically integrated operator takes 100% of the revenue, and there's no taxes on medical cannabis. So you have that, and then you have issues with packaging. You have issues with restrictions on packaging, on marketing, on the whole omni-channel strategy of the industry. So I find that from that perspective, it is true what he said. It's a difficult industry. Not everyone predicted that things would play out the way they have. And I think what you have now is companies trying to adapt. But that does not mean that some of these companies in Canada will not be able to build a moat globally, whether in Europe, Germany, or start to build assets in the US. And I think what you want to look for, when you think long term, because again, there is pressure on all these stocks, is who are the companies that have the right balance sheet, that can build cash flow, that have the right partners or the right investors in their shareholder structure, and that are building a footprint, right? Now, going back to your question about the US, the stock is down, but personally, when I heard the results yesterday in the conference call, what I would focus on more than anything is not so much the numbers of the quarter, but the fact that apparently their conversations with NASDAQ are going in the right direction, that they will be able to keep their listing in NASDAQ, and that in some way or another, they will be able to consolidate the assets they have in the US, or at least from a non-GAAP perspective, make it clear to investors what those assets are contributing in terms of earnings or EBITDA. Those assets in the US are profitable, and they're about half of the sales of the company. So if they can describe that, even on a pro forma basis, we think that would be a good thing.
Pablo, I'm going to try to squeeze in 2 quick questions, so hopefully we can keep the answers tight here. First of all, do you see more consolidation for the Canadian industry in light of everything you said?
Yes, for sure. It's an industry that has to consolidate. You're beginning to see it already in Alberta. Some of the retail, the 5-year leases are not renewing, right? So you're going to see, you're seeing consolidation in terms of retail shops, and you're also seeing some retailers come out of the industry, not renew leases. In terms of production, the same thing. Market shares have been volatile. Craft producers, small producers have gained share. But yes, we expect the larger operators to continue to consolidate the industry or vertically integrate. You saw Sundial and Valens, for example.
And then a final quick question. Does the Canadian government have to take a fresh look at its strategy, since a big part of this cannabis legalization was to move this market out of the shadows of the illegal market? And clearly a company like Canopy still thinks there's lots of activity, arguably competitive activity, in the illicit market.
Yes. Short answer, first of all, I always applaud the Canadian market, the Canadian government for having legalized cannabis, right? Having the guts to do that, the first global developed market. And of course, you have to be cautious at the start. But I think there's a number of changes they could implement structurally that could help consumers and could help companies. Remember, you're trying to build companies that one day could be, like the forestry and mining industries, large global companies. But I think that there has to be some changes in the way the market is structured in Canada, for sure.
Okay.